Across Western Sydney in 2026, many homeowners are beginning to feel the growing pressure of mortgage stress as rising interest rates continue to increase the cost of home loans, turning what once felt like a comfortable financial commitment into a daily struggle for thousands of families who only a few years ago believed they had finally secured the dream of home ownership. Because during the period of historically low interest rates, many first-time buyers rushed into the property market, hoping to lock in affordable repayments and build a stable future for their families. But as the economic climate changed and interest rates climbed steadily, the monthly repayments attached to those mortgages also began to rise, sometimes by hundreds or even thousands of dollars each month, forcing homeowners to rethink their spending habits, cut back on everyday expenses, and in some cases work additional hours just to stay ahead of their loan obligations while still trying to manage the increasing cost of living that is affecting almost every household across Australia today. And in many Western Sydney suburbs, this financial pressure is becoming more visible as families who once felt secure in their homes now find themselves carefully watching every dollar that leaves their bank account, knowing that missing even one mortgage payment could create serious consequences for their financial stability and their future. Because for most families, their home is not just a building, but the center of their lives, the place where their children grow up, where memories are created, and where they feel safe at the end of each long day, which makes the fear of losing that home an incredibly heavy burden to carry, especially in communities where many residents are hardworking people who have spent years saving for a deposit, taking on long work hours, and making sacrifices in order to finally buy their own house. And suburbs across Western Sydney, such as Mount Druitt, St Mary's, Blacktown, and several surrounding communities, are beginning to show signs of this growing financial strain, as mortgage repayments take up a larger percentage of household income than they did just a few years ago, meaning families must now prioritize their loan payments above many other aspects of daily life, including entertainment, travel, and sometimes even basic comforts. While some households have begun delaying major purchases or putting long-term plans on hold simply because their mortgage repayments have increased so dramatically that they must redirect much of their income toward the bank each month, and for young families who entered the property market recently, the pressure can feel particularly intense because many of them purchased their homes at higher property prices during the peak of the housing market, assuming that interest rates would remain relatively stable for several years. Yet the reality has turned out to be quite different as economic shifts, inflation, and financial policy changes have pushed borrowing costs upward, leaving homeowners to absorb the impact through higher repayments and tighter household budgets, which means that across Western Sydney, conversations about mortgage stress are becoming more common as neighbours share their experiences, discuss rising repayments, and look for ways to manage their finances more effectively in an uncertain economic environment. While financial experts often explain that mortgage stress occurs when a household must spend a significant portion of its income on home loan repayments, leaving very little room for other necessary expenses, such as groceries, utilities, transportation, school costs, and unexpected emergencies that can arise at any time. And when families reach this point, the pressure can quickly affect many parts of daily life, because financial stress does not remain limited to bank accounts or spreadsheets, but can also influence emotional well-being, family relationships, and long-term planning decisions, as parents begin to worry about how they will continue supporting their children while also maintaining their mortgage commitments. Yet despite these challenges, many Western Sydney homeowners remain determined to keep their homes, showing resilience and determination as they adapt their budgets, search for additional income opportunities, and support one another through a period that is testing the financial stability of many households across the region. Because for most families, giving up their home is not an option they want to consider unless absolutely necessary. And this determination reflects the deep importance that home ownership holds within Australian culture, where owning a home has long been viewed as a symbol of security, independence, and long-term financial stability, which is why the rising pressure of mortgage stress is such a serious issue for many communities. as it reminds homeowners how quickly economic conditions can change and how important it is to carefully